Well, hello everyone, and welcome to your Daily Five. I'm Joe Duarte from Duarte and the MoneyOptions.com, author of the best-selling Options Trading for Dummies and Everything Investing in Your 20s and 30s. If you like what you see here, consider a subscription to my website, Joe Duarte and the MoneyOptions.com. Today, I'm going to be discussing investing in megatrends. So our goal is to find the societal megatrends that will fuel investment profits for years, no matter what the Fed does. So step one is defining the megatrend. Step two is identifying the megatrend. And step three is picking investments that will profit from the megatrends. First, let's define a megatrend. And that is a behavioral change in society that steadily attracts investor capital for a period of years. In essence, it's a fundamental new direction or dynamic that changes society in an evolutionary way, such as the PC, the internet, and the internal combustion engine. So we want to be able to identify megatrends, and that starts with an initial event that changes everything, and it follows with the changes in the population behavior patterns. And then we identify the winning investments. So let's look at some real-time megatrend analysis. I'm going to use the COVID pandemic as an example because it fits what we're doing right now in identifying megatrends. So the initial event was the COVID pandemic. And of course, we know that changed daily life. We had shutdowns, we had all the other related events. The healthcare system became an extremely stressful place with hospital admissions, panic, financial system, markets went crazy, interest rates went to zero, stimulus packages from the government, we had supply chain disruptions, we had living and working arrangement changes. These are the things that change everything, and they're the classic presentation of an initial event and a megatrend. That's because you have behavioral changes that follow. And in this case, the big ones were the people left the cities, went to the suburbs, some moved to different states, people started working from home, and corporations eventually began to shift their facilities away from China back to the US, known as reshoring, or to friendly countries, which is known as friendshoring. So who benefited? Well, certainly the home builders benefited, and moving companies benefited, and commercial real estate was kind of mixed. So we had warehouses that became beneficiaries because of the supply chain related problems. And of course, we had office buildings that people began to leave the office, and that was negative. But a little appreciated beneficiary of the megatrend that emerged with COVID was the technology companies. That took a while to develop. I'm going to show you that in a second, but the work from home dynamic changed everything. That's because changes in networking and infrastructure followed. We had the explosion in data center construction, and we had the key part to everything, which is the semiconductor industry, blossom. So we have to be able to sort out the noise. And the first thing you do is you have to look around. You see what's going on. And I'll show you what I mean. You ask what people are doing. In my example with the home builders, where I caught the megatrend early, was that I started seeing out-of-state license plates in Texas. And there were people from New Jersey, New York, Washington, Florida, everywhere that were moving in. Figured these people need houses and places to live. So I started monitoring the markets. And when we do that, we have to look at the big picture, but we also have to drill down through individual sectors. And you have to match what you're seeing in the world, the behavior patterns. Then you find the individual companies with relative strength inside of strong sectors. And what you really want to focus on then is seeing which trends actually last and become real megatrends. And for that, we use weekly price charts. So we're looking at the first megatrend visualized here in the S&P 500. We go back to 2020, market crashed. We see this circled area here. We see when the Fed eased, the market started a huge bull market. And if you look at the chart here, you also see that the bull market, regardless of what people are saying, is still in place because these are weekly charts. So this is the 200-week moving average. This is the 50-week moving average. So from a very long-term megatrend standpoint, we are still in a bull market, even though it's relatively weaker than it was perhaps 6 to 8 months ago. You can look at the long-term indicators to confirm that. accumulation distribution has moderated, but is still in a bullish trend. Unbalanced volume is starting to recover. Buyers are actually starting to come back in. And look at the volume by price bars over here. Big breakout after that huge resistance level was taken out. And now we're seeing the consolidation right around this volume by price bar. So we have to be able to take our charting to a new level to invest in megatrends, and that's by using weekly charts. Now let's look at the sector situation. You recall the prior chart, the S&P 500 was essentially showing some relative weakness. It was down here around its 50-week moving average. You can see that home builders took off along with the S&P 500. They certainly gave back some of their gains, but again, the 200-week moving average proved to be excellent support, not once, but just twice. These are buying mega trend opportunities. And it looks as if home builders are about to break out again. And that's going to happen, if it does, when the Fed starts lowering interest rates. So the take-home message is that the home builders held up better in the S&P 500. That's relative strength. And that's because this is an existing mega trend. Remember, migration to new states, working from home. Next, we look at what I call the emerging megatrend, which is part 2 of the Great Migration. And this is what's happening in the semiconductors. When we look up here, we see that the 10-year US Treasury note is actually trying to stabilize around 3.5%. If it breaks below here, it will be a nice boost for the semiconductor stocks. And again, you compare them to the S&P 500, you can see that there's a little bit of improvement here starting to break out. And the S&P 500 is lagging. We also see that the RSI is well towards overbought, which might make us slow down a little. But again, the mega trend, the emerging nature of it looks to be pretty intact as that 200-week moving average held up. So let's look at individual stocks now. We have a home builder stock. I like to use Lennar in my examples. I own the stock. It's also one of the stocks in my long-term portfolio in Joe Duarte and themoneyoptions.com. Again, same pattern. You see that people moving to the southern United States created huge demand for housing. Earnings rose and the stock moved higher. When interest rates started hitting certain levels, the stock dropped, but it did not break below the 200-week moving average. Again, that's a sign that the mega trend is still intact. You can see accumulation distribution has picked up again. That means the short sellers are gone. The stock is rising. Unbalanced volume is starting to pick up now as buyers are starting to come back in, recognizing that lower interest rates are likely at some point in the not too distant future if the economy continues to slow down. So again, megatrend, emerging megatrend, the semiconductor stocks. This is the VanEck Semiconductor ETF, SMH. I like to use that as a nice market gauge of what's happening in the entire sector. Very similar picture, accumulation distribution starting to move up, unbalanced volume starting to pick up steam. And again, the point that I keep driving is a mega trend remains intact as long as that 200-week moving average provides support. And as we can see, the SMH is starting to move nicely higher. So to recap, megatrend investing is about realizing when major events have occurred that will change investing trends for years. You want to identify the societal changes that will fuel those investment changes for years, no matter what the Fed does. And that's where that 200-week moving average, very long-term trend line comes in handy. You want to connect with your surroundings. If you see that license plates from other states are flooding your state, those people are going to need somewhere to live. Look at the home builders. That's a great example. If they're working from home, look at the chip stocks because they're going to need new PCs, laptops in order to work from home. The other key is you want to see which trends last. And that's where that 200-week moving average comes in. That's why we want to use those weekly charts. And you want to core down to those individual investments. That's all I have for today. This is Joe Duarte from Joe Duarte and themoneyoptions.com, author of the bestseller Options Trading for Dummies. If you like what you see here, please consider a subscription to my website. And if you want to keep up with other things that I'm doing in addition to my website, such as expanding analysis on news items and certain things like that, check out my Buy Me a Coffee page. Always remember, trading is uncertain. Be prepared.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.